Things have changed quite a lot in the housing market in the past year, and you may be asking yourself, should you buy or rent in 2023? You may be thinking that buying a property right now may be a bad idea considering the rising interest rates, which makes the cost of buying a property way more expensive than it was previously. But on the flip side of this, housing prices are beginning to decline. And when you are renting, you are literally putting money down the drain and you're paying off someone else's mortgage when you could be using that money to pay off your own. So it's understandable many of you are asking, should I buy or rent in 2023? So in this video, I thought it would be a good idea to share all the factors you should consider when deciding to buy or rent in 2023. And hopefully by the end of the video, you can make your own decision as to how you want to proceed. If you're new here, then my name is Ollie, and on this channel we discuss all things related to personal finance, investing, and how to reach financial freedom. If that sounds like something you're interested in, then I recommend you subscribe as I upload new content every week. Also, if you get any value from this video, then I'd really appreciate a thumbs up, as a ton of effort and research has gone into this video and it massively helps support the channel. And feel free to share this video with anyone else who you think may find it helpful also. Before we get stuck in, I must be clear that nothing in this video is intended to be financial advice or mortgage advice, and if you want either of these, you should seek a suitably licensed professional. This is obviously a complex topic, and with lots of moving parts, it's constantly changing. Information also varies by region, so all my sources are linked below, so please make sure to check them out for any updated or more in-depth info. As always, I'm going to break this video into sections, so feel free to jump ahead using the timestamps below. If you've not seen the first part of this video series or want to know the basic pros and cons of renting versus buying, then I recommend you check out this video, which I'll put a link to up here, and I'll also put the link in the description below. So firstly, I'm going to start with what's currently happening in the property market, and I'll explain why house prices are falling, and then I'll discuss what may happen to house prices in 2023 and if house prices may crash in 2023. Then I'll finish up by discussing the factors affecting whether you should buy or rent in the UK in 2023. That's a lot of 2023s. So where are we currently? So in the last few years, house prices have risen massively, mainly down to the pandemic, where there was pent-up demand, and with more people continuing to work from home, it has created a desire for nicer homes with more space and also a desire to live in rural areas. Back in July of 2020, the government also introduced a stamp duty holiday to boost the property market, and with low mortgage rates and with more demand than there is supply, it caused house prices to rise. Looking at this graph here, you can see house prices against earnings are at their highest rates they've ever been. And also, average house prices are the highest they have ever been, but they are starting to come down. According to Halifax and Nationwide, the average UK house price has now fallen for the 4th month in a row. Halifax puts the average UK house price currently at £281,272, which is a 1.5% decline from November, when the average was £285,425. This was also after a 2.4% decline in November. Meanwhile, Nationwide puts the average house price at £262,068, which is a 0.1% fall from November's level. The difference in these figures between the companies is down to the way they calculate them. Mortgage approvals for home purchasers have also plunged to their lowest levels since June of 2020, with borrowers facing higher rates and the cost of living crisis. Based on Halifax's statistics, it is worth mentioning that while house prices are falling, they are still up 2% from the prior year. And according to Nationwide, they claim annual growth sits at 2.8%, but the rate of annual growth is slowing. And according to Zoopla, the number of new property sales agreed has fallen by 28% in a year, and demand for homes has halved compared to this time last year. So why are house prices falling? Well, many factors are causing this, but it's mainly down to people having less available cash due to the cost of living crisis and rising mortgage rates. But to understand this a bit more, We are facing a time of high inflation where goods and services now cost more than what they did last year. This is down to a number of things. In recent years, central banks have been printing money, which gave people more money to buy goods. Also, the pandemic and the war in Ukraine have created supply issues. The war has also inflated energy prices, which affects the manufacturing and shipping of goods around the world and also raised household energy prices. It's a bit of a perfect storm. And to fight this, central banks have now raised interest rates. This incentivizes people to spend less money and save more. The problem with this is that it doesn't just affect savings rates, but it also affects loans. So, as of December 2023, the Bank of England's base rate now sits at 3.5%, which is the highest it's been since 2008. And analysts predict this to rise above 4.75%, meaning the best fixed rate interest rate deals are likely to exceed 6% in 2023. Rising rates make it more expensive to borrow money, which means fewer people can afford mortgages. According to the Bank of England, mortgage approvals for house purchases fell to 46,075 in November, down from 57,997 in October. This is the lowest level since June of 2020. In addition to this, following Liz Truss and Kwasi's mini-budget, the Bank of England has warned it will not hesitate to raise rates further to fight inflation. In the aftermath of the mini-budget, mortgages surged over the unplanned government borrowing. The average interest rate jumped to a 14-year high, peaking at 6.55% at the end of October 2022. However, since Rishi Sunak has taken office and with the new Chancellor Jeremy Hunt unveiling a more responsible budget, the markets have stabilised, which has led to mortgage rates falling, with the average 2-year fixed rate now under 5.8%. Also, several lenders withdrew mortgage deals after the mini-budget, reducing the availability of home loans. So far, mortgage payments have remained affordable for those with large deposits, but this isn't great news for first-time buyers who tend to have a small down payment. Nationwide said a 10% deposit is now more than 50% of a typical first-time buyer's income. So what will happen to house prices in 2023? Unfortunately, this is impossible to say for definite, and I do not have a crystal ball, but we can look at the factors that are potentially going to affect the market this year. So people with variable rate mortgages are unfortunately already going to be affected by the rising rates. But many people on fixed rate mortgages will also be affected when these expire this year. According to this Bloomberg article, 1.4 million fixed rate deals are set to expire this year, with 57% of them currently on deals of less than 2%. And according to the Office for National Statistics analysis of the Bank of England's data, the average variable rate mortgage is currently 4.41%, and fixed rate deals start at around 5%. This will mean that 800,000 UK households will see their mortgage rates more than double this year, as they come off low fixed rate deals, which will only add to the cost of living crisis. Previously, when fixed rate mortgages expired, many would remortgage onto a new fixed term product to keep repayments low. Unfortunately, this just isn't an option, and many people may be stretched beyond their budget due to the ongoing cost of living crisis. A lot of people may have bought houses with the presumption interest rates would stay low, seeing as they have been low for the past decade. And unfortunately, if you are trying to sell it in a market where many other people are already trying to sell, and when people can afford less, it puts downward pressure on the market, and prices are likely to trend down. In addition to this, many landlords are leaving the market due to increased regulation, which is only increasing the downward pressure, but at the same time, this is reducing the rental stock availability and increasing rents. So will house prices crash in 2023? Well, as mentioned previously, no one can predict the future, and nothing in this video is financial advice, but the rising interest rates are making mortgages more expensive and in turn reducing demand. Many large mortgage lenders have attempted to make a prediction based on the current factors. Halifax, the UK's largest mortgage provider, said in their 2022 House Price Index report that they are forecasting an 8% decline over the course of the year. Now, while this is great news for first-time buyers, prices are still above their pre-pandemic levels, and a drop of 8% would return prices to their April 2021 prices. They are also quoted as saying, over the past few months, uncertainties about the extent to which cost of living increases will impact household bills, alongside rising interest rates, is leading to an overall slowing of the market. The Office for Budget Responsibility thinks house prices are forecast to fall by 9% between the fourth quarter of 2022 and the third quarter of 2024, largely driven by significantly higher mortgage rates as well as the wider economic downturn. But Rightmove forecasts that prices will drop by an overall average of 2% next year as a multi-speed hyper-local market emerges, with some locations, property types and sectors faring much better than others. Now, while these companies have provided these estimates, it is worth bearing in mind that different regions across the UK will vary, as well as by property type. As many people continue to work from home a few days a week, there is still demand for larger properties with space for a home office. And while people have looked for properties outside the city, some people have now started to return to cities, which is driving up the average price in these areas. So then this leads to the question, should you buy or rent in the UK in 2023? Well, again, there are a lot of factors at play here, and this depends on your personal circumstances. So this is a decision you need to make, and for every person, this will be different. There are pros and cons for renting and pros and cons for buying a property, and it is not something to be considered lightly. So make sure to do your own research, as once again, none of this is financial advice. So let me lay out the factors. Normally, if you're renting, then you would hopefully be able to save more money so that you will have a bigger deposit for your mortgage. But as rental prices have been rising and reached record highs in 2022, this has made it more difficult. Fortunately, rental prices have shown some signs of slowing in December, where HomeLets recorded average monthly rents falling by 0.1% from November. According to the latest data from the ONS, as demand continues to heavily outweigh supply, private rental prices have increased at their largest annual rate for more than 5 years. And according to Zoopla, in December 2022, rents saw an annual increase of 12.1%, which is twice the average yearly earnings increase of 6%. It's worth bearing in mind that even with increased interest rates, mortgage rates could still be lower than the cost of monthly rent. But if you are going down the mortgage route, it's worth considering that the cost of living may continue to rise, and as a homeowner, you have more responsibility for repairs and upkeep. And as inflation stays rampant in the UK, there is a real possibility that your wages may not rise in line with inflation, so this is a decision you should fully calculate before taking out a mortgage. At the end of the day, if you are undecided, then you can always rent for a bit longer and see where the market goes. You never know, you may find there could be better opportunities if you wait. Should first-time buyers delay buying a property? As mentioned previously, the consensus is that house prices will fall over the next 2 years. So anyone who buys now risks seeing the value of their home fall, and you could end up in negative equity. Although this would only be an issue if you wanted to sell your home. But for example, if the cost of living continues to rise, you need to consider if you will have enough disposable income to cover everything you need in your life. If the predictions come true, then by holding off, you may not need such a big mortgage loan, and the minimum deposit required may be smaller too. If you have the option to save additional money by living in a house share or living with family rather than renting your own property, then you may be able to save a larger deposit. While there are plenty of predictions that house prices will fall, it's impossible to say for definite, and you could be waiting indefinitely for them to hit your desired price. And if house prices do fall and you decide to wait, this may come at the expense of being able to secure a cheaper mortgage. Also, if people know that house prices may fall, you may even find a seller wanting a quick sale now before rates peak. So unfortunately, like I said earlier, everyone's circumstances will be different, and ultimately this is a decision you need to make. So hopefully this has given you a good starting point when making your own decision. Let us know below whether you are thinking of buying, or are you going to continue renting for now? Let us know your thoughts on the market, and let us know where you see the property market going this year. And if you got any value from this video, then please don't forget to like, as it makes the world of difference. And if you want to see more content like this, then don't forget to subscribe. And while we still face crazy inflation, you may be wondering how to protect your wealth. So I recommend you check out this video next on how to profit from inflation. It's been Ollie from Get Geek Finance. Thanks for watching, and I'll catch you in the next one.